Hey guys, it's Michael. The Chinese EV maker NIO is up an incredible 1,090% since lows in March, and the epic run isn't over yet. In a recent interview with the CEO of NIO, William Li, he said that he expects NIO will triple their manufacturing capacity by the end of 2021 and expects to increase this even more in the coming years as the Chinese EV market continues to grow rapidly. The China market for EVs is inflecting faster than analysts anticipated, as we saw in the strong September's sales numbers, and now the Chinese government has policies in place that could potentially help NIO even more. So in today's video, we're first going to go over what is going on with the Chinese government and how this could potentially help NIO skyrocket in the coming months and years. Then we're going to go over price predictions for the stock and why NIO's share price could increase 5x in the coming years. And at the end of the video, I'm going to touch on an up and coming publicly traded EV company that produces electric mopeds in Asia, and they sold 250,000 units in 1 quarter alone. So you won't want to miss this. And if you enjoy this sort of content, well, then please be sure to like the video down below and subscribe to my channel. It really helps out a lot. So, many tech companies have posted massive share gains since the pandemic-inflicted March slump, but few have generated as much upside and increased as much as NIO has. NIO is up over 1,000% since March, and many analysts believe this is just the beginning. One of the many reasons why analysts believe NIO is up so much is the fact that customers in China have been waiting several months for deliveries due to excess orders, and this has caused growing excitement among buyers. They want to be in that select group of people who are able to get electric vehicles. Basically, why this is happening is that the Chinese government requires automakers doing business in the country to follow strict rules covering the production of so-called new energy vehicles, NEVs, as part of a quota system they have established, so companies ultimately have limits on what they are able to produce. China hopes NEVs, such as battery-powered electric vehicles, plug-in hybrids, and hydrogen fuel cell cars, will account for around 1/4 of all cars sold in the country in 2025, which will be up dramatically from the 5%, less than 5% in 2019. And CEO of NIO, William Li, recently came out and said that the current constraints on the production from the Chinese government will be lifted in the near future, and they are confident that their production capacity can meet the accelerated demand of their models. William Li said that he expects NIO will be able to manufacture 150,000 vehicles annually by the end of next year, compared to the 60,000 that they are currently able to produce. And shortly after that, he thinks they'll easily be able to get to 300,000 vehicles a year. So now onto the NIO stock. After pulling back slightly after its massive 30% run in 1 week, NIO is now setting itself up for another huge run very soon, and there are 3 specific reasons among many that I want to touch on. The first is that NIO is a Shanghai-based company, and the government and political leaders in China very much want a Chinese-based company to succeed over a company that's not based in China, for example, like Tesla. This is why companies that are based outside of China, like Tesla, could be in huge trouble if tensions get worse between the two countries, and why NIO could potentially skyrocket because of government support and government restrictions on other companies. The second reason is that China hopes NEVs, such as battery-powered electric vehicles, hybrids, and hydrogen fuel cell cars, will account for around 1/4 of all cars sold in the country in 2025. And that's going to be 5x from what is right now. Currently, NIO is the leading EV Chinese-based company in China, so they have a big advantage moving forward. And finally, NIO's vehicles are relatively high quality and are actually ranked even better than Tesla. According to JD Power, NIO ranks highest among all brands in the battery electric vehicle segment, with 109 problems cited per 100 vehicles, while Tesla is cited to have 113 problems per 100 vehicles. NIO's ES6 model ranked highest in the mid-size battery electric vehicle segment. So basically, they have very high vehicles that customers and consumers really like, and they're ranked the highest in the JD Power surveys. So ultimately, for these 3 reasons and more, we can expect NIO to reach $100 within the next couple of years. Analysts expect that we could see this $100 pretty quickly, depending on what happens with the Chinese EV market and with what is going on with the Chinese government. And finally, I want to give you guys a quick note on an up-and-coming electric moped company to keep an eye out on in Asia called NIO, N-I-U, very similar to NIO. But NIO is the leading electric scooter company in China and has been on a tear lately, which is why the stock price has been soaring. NIO announced that the company had sold 250,889 electric scooters in Q3 of 2020 alone, and that is 67.9% growth from the year before. China is NIO's largest market, and they sold 245,000 of their vehicles out of their 250,000 in China alone. So if you'd like more information on this company and the stock price predictions, comment down below NIU, so I know you guys want a more detailed video on this. But anyways, that's what's going on with NIO, price predictions for the company, as well as what the CEO recently came out and said about production and the Chinese government. I hope you guys enjoyed today's video. Don't forget to get your 2 free stocks valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you next time.